presented by Sabrina Ziani. Title of the film: David's Journey Accounting. Estimated duration: 10-12 minutes. Scene 1. Beginning. In a cafe. Scene description: David, a first-year student, is sitting in a cafe, reading his accounting book and looking stressed. David, voiceover: accounting, journal entries, the ledger, balance sheets. My head is spinning. How do I understand all of this? A fictional character, an amusing teacher, let's call him Daniel, suddenly pops out of the book wearing oversized glasses. Daniel: come on, David, let me take you on a little journey to show you everything in a simple way. Scene 2. The world of journal entries. Scene description: David imagines himself in an office where financial transactions are being recorded. Daniel: a journal entry is the first step in accounting. It's the way we record every financial transaction that happens in a business. On-screen graphics with simple illustrations. Example 1. Buying inventory with cash for UO1, 0. The journal entry: debit. Inventory UO1, 0 credit. Cash UO1, 0 David. Why debit and credit? What does that mean? Daniel: simply put, the debit represents something that's increasing, like inventory, and the credit is something that's decreasing, like cash. Scene 3. The journal ledger. Scene description: David now sees large books, the journal ledger, where daily transactions are written down. Daniel: every transaction we record goes into the journal ledger. It's a neat register that arranges the transactions by date. Practical example: date: April 1. Transaction: selling inventory for $500 in cash. The journal entry: debit, cash $500, credit, sales $500. It's written in the journal ledger like this: 1, 4, cash, debit, ubik, to sales, credit, €500, sale of goods for cash. Scene 4. The balance sheet. Scene description: David now sees a giant balance scale with assets on one side and liabilities (1), equity on the other. Daniel: the balance sheet is a snapshot of the company's finances at a specific point in time. It contains 3 important elements. Assets: everything the company owns, cash, buildings, inventory. Liabilities: debts and amounts owed by the company. Equity: owner's contributions, Jiaowan, profits. Visual example: assets 20, 0 liabilities, 5, 0 equity equals 15, 0 Daniel: the equation always has to balance. Assets equals liabilities, Jia, equity. Scene 5. Back to reality. Scene description: David returns to the cafe, smiles, and closes the book. David: now I get it. The journal entry is how we record transactions, the journal ledger is where we store them, and the balance sheet shows the company's financial position. Thanks, Daniel. Daniel disappears into thin air. Once you understand accounting, you'll start seeing money in a whole new way. Ending. Text on screen. Subscribe for more fun and cinematic accounting explanations. Leave a comment. What concept would you like us to explain next?